Long-term holders are selling their bitcoins while we see a relative high open interest and also a rising C4D spot. Why we think that are the first signs for a bigger correction on the Bitcoin price we want to talk about in this video. Together with Finn and Liam, I will update you today on the latest news on chains and charts for the Bitcoin price. Right after the intro, Finn will take a closer look at those on-chain data and also on the news. Treasury Secretary Janet Yellen calls for crypto legislation. Liam will update you on the most important chart patterns, this on the daily, or better say 4-hourly time frame, and he will also talk about the most important support and resistance we are currently seeing on the Bitcoin price. If you like the video in the end, please leave a like, subscribe to the channel and activate the bell. I would say let's start with the video. Let's go.
In the on-chain data news, we should really talk about the open interest, the CVD spot, and the funding fee. We also will talk about some other on-chain data news, but first I will say we'll just jump right into this charts right here. The open interest is indicating how much open interest are on the exchanges, which are leveraged positions in Bitcoin. So we can clearly see we had $11.3 billion, which is pretty high and in my opinion needs to cool down a little bit, which could be one of the reasons why we could see a further correction to the downside, because also we have still a positive funding fee, which indicates that the futures market is a little bit higher than the spot market, and so the funding fee is positive. So in my opinion, it could be that we will see another big wick to the downside in the Bitcoin price, so we will see some liquidations in the open interest and maybe even see a few days of negative funding fees. This will also match with the CVD spot. The CVD spot is the cumulative volume delta of the spot market, so if there's more buying volume than selling volumes, this will rise here. And if we have a look at the smaller time frames, like the 2-hourly time frame, we can clearly see that since the improvement of the spot ETFs, the CVD spot has steadily risen to the upside. So there was more buying volume on the spot side. At first when we saw the correction, we saw the open interest dropped a little bit, but for now we see a rising open interest, we see a rising CVD spot, but we can clearly see if we have a look at the coin days destroyed, which indicates how long Bitcoin were held and then sold. So if one Bitcoin is held for 1 day, that is 1 coin day is destroyed. If one Bitcoin is held for 100 days and then sold off, it's 100 coin days destroyed. So if this is very high, we can clearly see that old Bitcoins which were held for a long time have been sold, which is the case at the moment. So we're seeing old Bitcoin long-term holders selling their Bitcoins into the spot market, into the futures which are buying currently, and if the spot market does not buy anymore and the futures can't rise forever, or at least it's pretty unlikely that we see a massive continuation rise of the open interest, because normally we'll see big wicks to the downside if we have a positive funding fee and a large open interest, then in my opinion it could probably be on the bigger time frame that if this selling pressure continues with old long-term holder Bitcoin, that we'll see a bigger correction on the larger time frames in the upcoming weeks. But that's for the on-chain data today. Now we will talk about the news, because the Treasury Secretary Janet Yellen had called again for crypto legislation. She again asked for congressional action to protect citizens of the US from risks associated with digital assets. To go more into detail, she clearly mentioned stablecoin issuers, that these should be more regulated for US politicians or regulators working in kind of for politicians. You always need to remember they have in mind the FTX crash where many US citizens lost money, so they don't want that to happen again. And for sure it's also important to mention that digital assets have become a key political talking point in 2024, also because we will see the presidential election this year, so it will be pretty interesting what will happen here. For now I don't think there are clear takeaways from that, but I think there will come many important news we really have to talk about. On this channel you will always be updated every day about the most important news, so make sure to subscribe and activate the bell for free, so you'll always stay up to date what are the latest takeaways from the US politicians, which are very important. It, I think, will definitely influence the crypto markets in the coming month. But for now I think we should talk about the charts, and this will do Liam today, so I will give on to him.
Guys, we have interesting signs in the charts that we will see a dump in the Bitcoin chart soon. And one of these signs is here on the day chart, and I would like to say that we can start here, because here we can see that we closed the yesterday's day candle below the 50-day moving average, as I said in the video yesterday. And of course the current day candle is also retesting or was also retesting the 50-day moving average, but got also rejected. And now we are in this situation that if we close this day candle here maybe red, and then we can see a dump to the downside and start or continue with our continuation to the downside, or start with our dump out of our symmetrical triangle, which we see on the hourly chart. What we can also see here is that if we print in, or if we draw in the ascending triangle, which I also mentioned in yesterday's video, we will break out soon out of this, because this day candle looks quite negative. We got rejected here from the 50-day moving average. We also retested the 33,000 US dollar and got rejected there. And the last day candle was also a bit more negative. So basically we can see that we will maybe start soon with our dump here. The breakout target of our ascending triangle was at around 44,800 US dollar, but I don't think that we will break out of this to the upside. But if we see the long scenario here, we will break out to the upside, then we will see the breakout target filled at 44,800 US dollar. But I don't think so, because we got rejected here. We dumped below the 50-day moving average, got there at least 2 days below, 2 day closes below the day moving average would be a very bearish sign for the Bitcoin price. And now we have to go forward to the hourly chart to see our symmetrical triangle. Here in the hourly chart, we can also see that we got rejected here. We tested on the 43,000 US dollar with the last 4 hourly candle, but got rejected here and closed it red. And this is a very bearish sign for the Bitcoin price, because we got another reject here from the upper resistance line here, and it is very likely for the Bitcoin price to break out to the downside. But I think a decision will be made soon. So guys, keep an eye on the Bitcoin price. We will dump soon here, I think, because we don't get above the resistance line here, or we don't get a 4 hourly close above our resistance line, and of course also not above our resistance line here at 43,200 US dollar. So be aware of our dump situation here. And guys, this was the video for today. I hope you enjoyed it, and we see us in the next video tomorrow. Thank you and goodbye.